Traders, welcome back to another price action trading lesson. We're going to talk about how to use price action rules to help us identify high probability setups. The very first thing I need to do as a price action trader is to analyze the main structure, and I can see that the supportive indicator to 1 bar exponential moving average is completely flat, and I can see consistent price swings up and down through the EMA. So this structure is a trend range, and because I know this is a trend range, my goal is to locate the extremes of the trend range. So I'm going to select the high of the day resistance, low of the day support. You can see there are a lot of ways how I can draw the support. So as the price action develops, I'm going to play around with it a little bit more and adapt to new price action. Why am I doing this? Well, because according to range rules, you expect price action to pivot upon reaching the support, the resistance, and these important key levels are the target for prices to reach. So you need to understand where are the extremes of the trend range. So you have a downtrend working lower, we have a break in extreme indicating that the downtrend played out, okay. And because market is pushing above EMA, you can see the buyers are buying this price level. What I'm going to do, I'm going to drag the support and put a little bit higher because I want to have as many confirmations as I can to understand what is the most confirmed key level and how is this information helpful to me. Well, if you're going to break above EMA, this can indicate bullish reversal. Remember, traders, they buy low in trading ranges, so we're going to see push above EMA that may hint potential signs of bullish reversal. So price action keeps trending higher, and this is good. So we can draw a little bit of a wider channel because we expect bullish reversal. Okay. And market keeps going sideways, and we have now new low, first attempt to sell, pull back, second entry short, failure. Now this is a failed second entry short. This is not a horrible setup. Makes sense because you're above EMA, but the signal bar is quite sketchy. Overall, it is getting a little bit stacked, decent entry, but didn't form the clean. If you took it, you had the right idea. It is not the cleanest though. Market is correcting, and now we have a new high, first entry long, second entry long. Okay, because I need to reset the count at each new high. And this is also mini failed second entry short failure as well. But because it is off the trend line, you can see market geometry allows you to trust this trend line. You have two key entry points, not just one. So this is first decent high probability setup for the day. You're above EMA, two key entry points, new high, first entry long, second entry long. The second attempt, a key entry point under right context, that's the high probability setup. Now market completely blasts through the trend channel line, and we have very strong overshoot. Now in fact, this overshoot is so strong, it completely rallied all the way to the high of the day, this resistance, and notice how far you're from the EMA. Okay, there's equilibrium in prices. EMA acts as a magnet. It is constantly pulling prices closer to it. So once you can see price action so far from the EMA, if you're going to combine it with the overshoot, which is overbought momentum, and you're at the top of the trend range. So remember, current range rules, you expect market to pivot. More advanced trader, if you're willing to take a risk and you're swinging the position a little bit more, bigger target, you can sell here because you're going to combine the high of the day, massive overshoot, and you're so far from the EMA, the price action has to pull back. This is a trend range, so price action needs to pull back. If you want to be a little bit safer, we want to see, of course, some lower high or first second entry long below EMA that never formed. Market reversed all the way down here. So as you can see, I keep following the short-term channels. Okay. Now your first instinct may be to expect second entry short that never formed. And as I can see, we're pushing above EMA. What do you think? Can we consider to take a failed breakout out of this trend range? Not really. Because we have higher lows and we're pushing above EMA, there's a big chance right now we're going to test or at least attempt to create a new high for this initial channel. You can use 10,000 tick chart and see that you're still above EMA. But right now, the chances are higher that we're going to test the new high, especially as you're above EMA. You need to use the micro at the bottom, redraw a brand new uptrend working higher, and don't be selling above EMA. There was no setup anyway, so no trap, fortunately. Market keeps trending higher. Okay, we have a new high. First entry long, second entry long. Of course, cannot go long directly into the resistance. Notice how far from the EMA the body is. This is what would be called EMA tail trap. But more importantly, of course, you cannot go long into these highs, into the resistance. Now, uptrend played out almost with the break new extreme. This is tempting short entry, but we don't have technical new high. This is a problem. You're selling quite high, but feels a bit more aggressive. It would be better to wait a little bit more. Let's see what's going to happen. Market keeps trending lower. No confirmations up, no nothing. So what I'm going to do, redraw. Brand new downtrend working lower. If you sold here, not that it is wrong price action wise, just you're selling a little bit early without full confirmation because there was no technical new high, just micro double bottom, micro double top. So now what do we expect? We expect second entry short at the EMA because this downtrend going to trend line rule needs to get new extreme. So I'm going to reset the count at each new low and I'm looking for breaks below these bars lows. No first entry short. Okay, finally first attempt to sell. So I want to see a little pullback higher to the EMA and a second entry short. And there is no second entry short because we already created move to new extreme. So I'm pausing, looking to sell. You can see this low broke the latest lowest low inside this channel. So new low was tested. I cannot take a failed second entry short below EMA. Remember, reversal pattern needs to form above EMA. Market keeps trending lower. We keep trending higher again. So I'm going to redraw a brand new uptrend. So this is what I do in trading ranges, trying to find a nice tight channel and always look for the retest upon breaking. Now we completed the blast lower, which was surprising. There was no retest, but this can sometimes happen in trading ranges, especially upon reaching the extremes. Actually pretty common. Downtrends working lower, so my first instinct is to expect new extreme to be tested. You have a new low, first entry short, kind of like a visual second entry short, but this is very close to FOMC announcement high impact news, and you generally want to be trading, let's say, hour to 40 minutes before the news, and definitely after news. You still want to give it at least like 10-20 minutes before the news is gonna settle in, because there can be spike in volatility. It can be too fast for you to make the trading decision. So when there is FOMC announcement, you generally want to be patient because it's just too fast. It is hard to make the decision. You can get a slippage. There can be whipsaw. For example, you can see we have a break new extreme of the downtrend, and this is failed breakout similar to here of the trend range. Most breakouts of trend ranges will fail. So if this was not around FOMC, this would have been perfect setup because this is failed breakout. Notice how strong this support is, very confirmed. So most breakouts will fail. All these sellers, they're going to get trapped selling directly into these lows, but according to rules, you want to buy low, sell high. So we expect market to go all the way up to here, but it is close to news. So we're better off just being patient and letting the news develop. You can see this is the spike in volatility, gigantic bars. Everything is printing super fast. You can see just 2 minutes and we can already have so much price action. So you have to let the price action subside a little bit. I'm going to draw uptrend working here like this, breaking new extreme. So market is just correcting. Everything is moving too fast. News came out. Let's let it subside a little bit. Downtrend working lower. We have a break. Move to new extreme. Okay, the previous resistance is now acting as a support. We're pushing above EMA and we have second entry short. Now, when I was watching this live, I didn't really read this correctly because I drew my channel a little bit wider and it wasn't confirmed because we pushed above EMA. But looking at this in hindsight, we have a clear two-legged pullback down. The support is holding and this is new low first entry short, second entry short failure, closing above EMA. This is great. Failed second entry short. Decent setup. Oops. Decent setup to take a chance. Failed second entry short. Confirming the wider channel. Two-legged pullback played out. New extreme is formed. We have overshoot, so we can have stronger pullback in the opposite direction. I'm going to redraw a brand new downtrend working lower. Okay. Market created another break and new extreme. So you can see another two-legged pullback down. First leg down here. Second leg down here. We're breaking higher. So what you're expecting, another failed second entry short, similar to here. New low, first entry short, second entry short failure. Market keeps trending all the way up. So am I going to draw a channel like this or wider one? I'm going to draw the wider one because we expect right now from the support to have stronger reversal bullish trend. If I'm going to draw a tie like this means I expect this leg to be part of some bigger trend down, but there is no bigger trend down. This was a range structure, so we can safely draw wider pattern. I'm expecting second entry long at 2 key entry points. New high first entry long, second entry long, great second entry long two-legged pullback at 2 key entry points, but the bar is gigantic, 6 points. And by the way, we're watching this in hindsight, but when you're watching this live, this is still extremely fast. Okay, so everything seems easy to analyze now, and like you have plenty of time to prepare your orders and draw your channels, but this was happening super fast. And if the bar is 6 points big bar, you definitely cannot take it because the risk to reward is just horrible. But had this been smaller, okay, you still want to study this because this is a two-legged pullback, brought 2 legs down, downtrend played away to break new extreme. You have 2 key entry points, Third swing confirmation. This is a great second entry long, but it was just too big. Okay. You have a break in your extreme of the uptrend, but the push to new extreme gets my attention because it is getting more. Notice how bullish it is. It is getting more bullish than expected. How come we're not correcting or reversing? So let's see what's going to happen. I can already think about possibly widening the channel like this because it still keeps the structure fairly intact. But I want some nice confirmation that the channel is going to hold. We're pushing above EMA, so this is good. And at this point, it looks like I can start trusting a little bit of a wider channel because it's getting confirmed here and here. I still have two early swings here, allowing me to confirm, because a lot of times when you're going to ignore the second swing, that's a sign that the channel is maybe too broad. So I'm going to redraw micro downtrend working lower. Micro double top resist account. So this is first entry long. I can't really take it. We have a second entry long, but it says congestion. EMA exactly in one of these bars. Notice it is getting a little bit squeezed. Feels like I need to be a little bit more patient even though I expect new high. Okay, we're going a little bit sideways. And now we have a second entry long off the support. And it's going to tell you the price action going to squeeze the sellers because there's a series of high lows. But you have another, actually you have micro technical new high. So this is a count reset first entry long, second entry long. You know, your gut feeling is going to tell you you're going to go higher. But it is a little bit stacked. You know, I know a couple traders took it and the idea is correct because you can see the series of higher lows here. It's definitely going to trap the sellers. If we're going to picture which side is going to get trapped, most likely the sellers because we traded up into this quite strongly. So we definitely expect the sellers to get trapped. You know what, I'm going to mark it. I quite like it. It's definitely more gut feeling based, but there are traders who have years of experience and they can rely safely on their gut feeling, their intuition. So this is not such a horrible setup to, you know, tweak the rules just a little bit. This is okay, gut feeling based trade, and market created. Massive push to a new extreme. So after break new high, what do I expect? I expect break through the EMA and I expect to get reversal or correction. So I'm going to redraw a brand new downtrend working lower and I expect to have some stronger bearish push. Let's see what's going to happen. And you're pushing already above EMA and a brand new high is created. So this is important. The fact that we cannot even test the new low for this channel like this tells you, hold on, market is not correcting at all. The new cycle is not reversal and is not looking as a correction. It's most likely going to be continuation. That can happen. There can be a brand new pattern developed. And if I'm going to look for a little bit flatter spike and channel, notice how nicely this spike and a channel fits. And definitely it fits perfectly off of these eyes. Notice there is a reason why there's so many stims here. The price action is rejecting this channel right here. So this spike and a channel gets a lot of confirmation. And because we didn't test the break in new extreme, this was the point I decided to trust this spike and a channel. Because it looked like a brand new push phase happened and a bullish continuation pattern. Micro double top can reset. What am I thinking about? Second entry long at the EMA, new high. First entry long, no break below, so the first entry long is still in effect. And now we have a second entry long off the EMA, great tier 1 single bar. This is great setup. Okay, second entry long. Oops. So great second entry long at the EMA. Price action bounced off the trend channel line as you expect. So you can expect some pullback now. Okay, market is correcting lower. So what is your thought process? Can you take a second entry long now? You cannot. I can tweak the channel a little bit to make sure I'm bouncing out the channel, but that's not important. Notice the downtrend keeps working lower and I have visual one leg working lower. This is clearly a correction phase still in play. So I need to respect this correction. I cannot jump the gun. You can see here we have downtrend working lower. There's no new extreme. Why is it okay to take the second entry long? Well, because we traced too much of this downtrend. Notice it pushed so far up, it retraced basically the entirety of the downtrend. So the EMA was too strong. There was attempt by the sellers to create new low, fell so strongly. So this is why we can ignore the retest. There was a one attempt. It closed so much higher, retracing the entirety of this downtrend. So we can go along here. Now the downtrend is clearly in play. There is no retracement just yet. So we're going to wait. Break in your extreme. You cannot go long below EMA because you don't know how many pushes low there's going to be. If you expect new high for this spike in a channel, which is the correct play according to trendline rule, you want to see push above EMA and fell second entry short. So you have a high low here, horrible. We have a failed second entry short, but it is so far from the EMA at the body, you can tell you're buying at the top of this push. You don't want to do this. You want to have some momentum still left in the tank. Failed second entry short, but you're buying at the top of the push. The body is so far from the EMA. You don't want to be chasing the entry. You want to make sure you're buying a little bit lower so you have room to catch the momentum. So you're going to skip this. And now you have continuation of the failed second entry short, the real one, because you corrected stronger to the EMA. You can treat it as a visual mini second entry long. You know, great setup, but this is way too late. So you can't really take it, unfortunately. Only thing you can do is just sit here and watch it. But because it's way too late already, you know, there's profit taking, market is about to close. So you don't want to be taking setups this late, but this is a great setup. You expect new high. Your stop loss is 1 tick below single bar, so you are still riding the setup. If you are holding for bigger target profit, and market indeed created break a new high, perfect price action, and now we're about to close. FOMC days are difficult to trade because the first half is super slow, very slow and very boring. It can lure you to sleep and lose confidence in your trading abilities because you're doubting yourself. Everything is so slow. This is normal. And once the news come out, it is on the other hand too volatile, too fast. So this is not easy day to trade. If you're a beginner trader, if you started trading a few months ago, you may just want to definitely be on sim, but you may just want to sit on your hands and just watch it develop. Maybe not even attempt to take setups because it is just too slow or too fast. But of course, if you're on sim, there's nothing wrong with practicing taking setups because at least you're going to learn and get some experience. But price action overall predictable. We started with a very healthy trend range. You're going to follow short-term channels. Then we had two-legged pullbacks here, two-legged pullbacks here, and then the uptrend started with a couple decent high probability setups. This was a great second entry long, but the single bar was just gigantic. With small bar, great high probability setup. So I hope you had a good trading day. I'm going to wrap it up. I'm going to talk to you next time. Good luck with your trading.